Hi there, Phil Rogers, Lauren Hall here from Loan Market Edge, coming to with our weekly wrap.
Take two,
because I swore
in the previous one.
Worse than I normally would in the last one, and that's the black on black. I was like, WTF with it's summer. The colours, the sun is actually out here today on the Gold Coast. It's very nice. It's a lovely day. Yet
we're in black.
Yeah, Saturday casual black. But what a week. Lots happening in the market, I guess, in our world. So a couple of things that are super relevant as always. For you guys would have seen rates have gone up. The 0.25, thankfully they didn't go maybe the 0.5 we were thinking.
Yep.
Still not great, but fixed rates probably jumping well up and above across the board for most banks. That's sort of a real moving target at the moment. We're seeing that continue to shift. Interestingly, and I don't know if it feels like a consolation prize sometimes. Some of the banks' variable rates are moving by maybe 10 basis points. Downwards, which is good. So still good news. Don't take anything away from that. But when rates are going up 0.5%, 0.25%, some banks are trying to just stay that little bit under and stay super competitive. So every little bit counts. Interesting to see some of those.
And just remembering the difference between what they pass on for existing customers and new customers is different.
Yes, hence the support you get from us being an amazing client of ours. We do have that ongoing support, that customer care team that helps make sure that each year you are getting the best possible rates. Because a lot of times, Lauren just mentioned, sneakily, what they advertise online for new clients is not what you get for being a loyal long-term client of that bank. So that's where we step in, poke the bear and make sure that you're getting looked after, because especially at the moment right now, those interest rates are more important than ever. And to be fair, to that point as well, the new discounts they're now offering have never been discounts they've offered before, right? So previously you have a standard variable rate and your bank says, we'll give you 1.2% off what that rate is. So that's your discount. So then as the rates move, you're always under. We're in some cases now getting 2.2% discount. So, to be fair to when you had looked at that 3 years ago, that discount wasn't available. The good news is working with us, it potentially could be. And again, by all means, if your bank isn't offering it, we can almost guarantee there's a bank out there that is. So definitely reach out if you feel that's you or someone you know. I shouldn't point at everyone.
You just went mad down a rabbit hole with that as well.
There's a rabbit
hole. I was trying to make like a quick little comment.
But that's what I do.
Cool. Coming back.
The next one is some good news, because we are the good news brokers.
Well, that's you.
Policies, when we get to the bad news, I'll bring Wells back in. So the good news is some of the policies post-COVID, what we call BC and PC, before COVID and post-COVID. I did just make that up. During COVID, obviously those policies got really tight with a lot of banks. There was a lot of things that they just adjusted on to try and manage. If we talk about one particular one's probably around casual income, post-code restrictions. So if we talk about casual income in particular, where some banks would be 1 month, maybe 3 months, some industry experience. They've really blown out to the absolute best possible was probably 6 months casual in a new role that you had to be before they'd accept you for that income as an application. Where over the last couple of weeks, we've probably seen a couple of those step back in and sort of shorten that 6 months, or potentially go to say 3 months, as long as you've had 6 to 12 months prior. So as long as someone can show consistency, be it in industry or a similar role, they're now looking at that casual income a lot closer. Because I guess, to be fair, during COVID, people were shifting between jobs and industries and everything very quickly, not by choice, by all means, in a lot of cases.
It's a little bit more instability.
And so they were just a little bit concerned about what that meant, and so they really wanted the stability of that 6 months. Where now that was really good news. One was as little as, I think it was 3 months, and if you'd had 6 months previous, so some really cool stuff starting to come out. And if that again is you or anyone you know of, or you want to explore that, definitely a good time to be doing that. Another benefit will be actually just on casual, we're now into that year-to-date piece. So where there's casual income or part-time, overtime, allowances, we've now just made the first quarter, so we've made 3 months year-to-date. A lot of banks have come back into the market with the flexible policy, I guess they used to have, that if you've got 3 months worth of that income now, we can take that snapshot and we can annualize that out. Yeah, where previously when you start that new financial year, we're only sort of 1 month in, they won't annualize this year, and then they'll look at the income you earned last year and they might adopt the lower of the two, and there's all these really tricky ways for that to work.
Just means if your new financial year's kicked off really well, and you are earning more, then we can be relying on your 3 months year to date, as opposed to looking at the full previous year based on your income summary.
Yeah, I think a lot of people are back into consistent, flow now of income and work and overtime and allowances, and everyone's sort of opened up again now. So it's a really good time to re-explore that as well, because maybe it's back in line with your true earning capacity or potential. Some more policies. I know we've spoken about, obviously, the self-employed stuff becoming a lot more flexible at the moment. The simple verification, the use of JobKeeper cash flow boost. That's an area that a number of banks are now rolling that out, which is great. But the overtime allowances, the other policy was the postcodes. We're seeing some relaxation finally, where a lot of the banks came down really hard in particular areas or types of, whether it be postcode driven, which was really difficult to work with because, a house in a high density, high-rise
fall
unit
under the same category.
Fell in the same category. So it was really difficult to work with, especially for a first home buyer being capped and not being able to buy in that area. So that started to relax. The high density rulings about, bigger buildings with holiday let and things like that. Again, it's starting to open back up because there is normality of travel, consistency in income earning, rental income, etc. So that's a big one. So any sort of conversations you might have had over the last 12 months where potentially you found that you couldn't borrow money at the time because of those rules,
or you needed more deposit, or you couldn't buy in that area or that particular building.
It's back on. So all
game on.
Very much good news there. The other one I thought about, just that run home to Christmas. I know it's crazy to be bringing that up, but we're sort of 8 weeks, 9 weeks today, maybe, from the big man coming down the chimney. So this run home to Christmas is always big in the finance and real estate markets in general. This year feels no different, probably even a little bit more crazier already. So it's understanding the timelines, I guess, and time frames in that run home. It does get very, very busy, and a lot of the banks over the next probably 3 to 4 weeks will start to release their cutoff dates for refinances, purchases, settlements, etc. So if it is something that you've sort of got in the pipeline at the moment, and there is a hope to want to do something this side of Christmas, firstly call us. We'll probably do the rest, but now's the time to get super organised. Now the time is
get the calendar out, check out the dates in there.
Because in that lead up there will be, and again the gap, I was going to use the black hole, but the gap between Christmas and where everything just is Christmas and New Year's,
everything stops.
It is a non-event. Your solicitor may potentially stop working, that first week, what's 23rd, 20th, around that date of December. There may be 2 weeks at the end of the year that actually don't exist in solicitor, banking, real estate, finance
We
worlds.
do not want to be settling that week before Christmas.
Correct.
We want that done and dusted and out, and you're in.
We're looking to take advantage of that stuff. If it's money for renos, if it's refinancing the home, if it's a purchase, now is the time to call us. But now is the time to get organised and start looking at that. Likewise, if you are a self-employed client, I keep pointing. If you're a self-employed client, talking to you.
So
if you're a self-employed client, make sure things like your tax returns are organised. Start thinking about those things, because that's going to take time. Because anyone that's in the flow of helping you to get your application ready, it's going to be tight for everyone. So that's our big top tip, is just to start getting organised in this run home. It's a very exciting time of year. Sun is out. What a great day to be wearing black. But the sun is out. And for now, enjoy the weekend, and we'll see you guys next week.
Bye.
Bye.